All right, let's dive right in. Today, we're breaking down a monster earnings report from the customer engagement platform Braze. Seriously, they just put out a quarter that didn't just impress Wall Street, it sent an absolute shockwave through it. And you want to know how we know? Well, just look at the market's reaction. In after-hours trading, the stock just exploded, rocketing up over 15.5% on some seriously heavy volume. A move like that isn't just about good results. That is a statement. So that leads us to the big question, right? What in the world was in this report that sparked such a huge bullish response? Let's get into it. We're going to unpack the numbers, the strategy, and what they're saying about the future to see exactly why investors are so pumped. Okay, first things first, let's look at the core financials, because this is where the story really starts. Braze didn't just squeak by the estimates, they absolutely blew past them. It's a clear signal that the business has some serious momentum right now. It all kicks off with the top-line revenue. The street was looking for about $171 million. Braze came in and delivered over $180 million. That's almost a 24% jump from last year. That kind of beat tells you one thing loud and clear. Demand for their platform is just incredibly strong. But honestly, the real jaw-dropper was on the bottom line. Analysts were expecting earnings of maybe 3 cents a share. Braze delivered 15 cents. I mean, that is a 400% surprise. It shows this company isn't just growing its sales, it's getting way more profitable, which shows some fantastic operating leverage. Now, let's talk about a really important metric for any company like this, dollar-based net retention. It basically just tells us if their existing customers are sticking around and, more importantly, spending more money. Anything over 100% is good. Braze posted 108%. So on average, their current clients spent 8% more this year. And what's really important here, management said this number has finally stabilized and even started to tick back up. That is a very positive sign.
And all this growth is being built on a really solid foundation. Their total number of customers is up 12%, which is great. But look at this. The number of large customers, the ones spending over $500,000 a year, that group grew by a massive 27%. This shows Braze is successfully moving upmarket and landing those bigger, stickier deals.
So the numbers are fantastic, we get that. But what's the story behind the numbers? What's driving all this? Well, the answer seems to be a super focused and pretty aggressive strategy that's built around one thing: AI. Braze is running a really clear two-part AI playbook. First, they went out and bought a company called OfferFit, which brings in some powerful reinforcement learning for super smart personalization. And second, they launched something called the MCP server, and this is a game changer. It lets brands connect those powerful large language models directly to their own private customer data. The CEO, Bill Magnuson, he has a name for this: composable intelligence. The basic idea is to get marketers to stop thinking about just running simple campaigns and start thinking about running these, autonomous, intelligent systems instead. It's a big, forward-looking vision, and it's what's really making Braze stand out from the crowd. And guess what? It's working. They're actively stealing business from those older, clunkier, legacy marketing clouds. As first-party data gets more and more important, Braze's modern platform is in the perfect spot. And they're landing some huge brands. We're talking names like Little Caesars and Sweetgreen jumping on board. A great quarter is one thing, but what really gets investors' hearts pounding is a confident outlook for the future. And that's exactly what Braze delivered, raising their guidance in a big way for the rest of the year. You can just see the company's confidence right here in the numbers. They jacked up their full-year revenue forecast by about $14 million. And even more impressive, the earnings guidance got a major boost too. This tells you that management feels really good about what they're seeing and they're confident they can execute. And here's the kicker. This is a really crucial point. They are now forecasting a 3.5 percentage point improvement in their operating margin for the entire year. For a company that's growing this fast to also show that you're becoming way more profitable, that's the magic formula. It's exactly what the market wants to see, and it proves their whole model is working. Okay, so we've seen the strong results. We've looked at the smart AI strategy. We've seen the confident outlook. Now let's put it all together and make our call on what happens next. So just to recap, the bull case here is pretty straightforward. They're winning against their competitors. Their AI strategy isn't just buzzwords, it's a real advantage. The company is actually generating cash now for 3 quarters in a row. And by raising their guidance, they basically erased any worries about their execution in the near term. So for our official next call, here's what we think. We expect Braze to meet or probably even beat its next quarterly guidance, especially as they start getting wins from that OfferFit deal. We think the stock probably has more room to run, as long as that net retention number holds steady and we see customers start adopting these new AI tools. So based on this powerhouse quarter and their clear strategy, our rating is outperform.
And of course, we have to say it, and it's very important, this is not financial advice. All of this analysis is for informational purposes only. So we'll leave you with this final thought. Braze is clearly and very skillfully riding the AI wave to take market share from the old guard. The huge question now is whether this momentum is enough to transform them from just a market leader into the undisputed default industry standard for customer engagement. Now that is the multi-billion-dollar story to watch.